Welcome to our video on navigating the shift from being an employee to becoming a contractor and understanding the associated tax implications. In this video, we'll dive into understanding the tax implications of switching from an employee to a contractor, estimating your tax obligations, exploring financial and other critical considerations, and finally, reviewing some valuable resources. We begin by understanding how switching from being an employee to a contractor affects your tax situation. As an employee, taxes are withheld from your paycheck, but as a contractor, you'll handle these tax responsibilities yourself. Let's move on to estimating your tax obligations as a contractor. Many contractors typically set aside approximately 30% of their income for taxes. This estimate typically covers your self-employment tax, along with federal and state income taxes. However, this is just an estimate, and you might need to adjust it based on your income, deductions, and potential tax credits. It's always a good idea to consult a tax professional for advice tailored to your specific situation. Now let's talk about the financial considerations when becoming a contractor. Being a contractor often requires a higher hourly rate to cover not only the self-employment tax, which includes both employer and employee portions of Social Security and Medicare taxes, but also the absence of benefits like health insurance or retirement plans which employees often enjoy. There are more factors to bear in mind. First, consider whether the terms of your new contract primarily reflect contractor status. Analyze whether the pay increase offered covers additional tax obligations and any lost benefits. Remember, clear statutory criteria exist to differentiate employees from contractors, and misclassification can have serious consequences. Also, always ensure that you pay estimated taxes quarterly to avoid potential penalties. Now it's time for a quick quiz. What percentage of income do contractors typically set aside for taxes? Is it 15%, 30%, 50%, or 65%? You may pause the video now to think about the answer, and we'll discuss it in the next section of the video. The correct answer is 30%. Contractors typically allocate about 30% of their income to cover their tax obligations, including self-employment tax and income tax. Let's reiterate some key points here. Determining whether someone is an employee or a contractor is crucial, as misclassifying employment status can lead to serious consequences. Remember, contractors have different benefits compared to employees, and it's always recommended to consult with tax professionals to navigate these complex areas effectively. In summary, transitioning from an employee to a contractor means taking on new tax responsibilities. Consulting with professionals can provide valuable guidance. Remember the importance of verifying employment status to avoid complications, and utilizing IRS resources to better comprehend self-employment tax obligations. Thank you for watching. We hope you enjoyed the video and found it useful. If so, remember to like, share, and subscribe, and do share your thoughts with us in the comments below.